Right. Well, the Fed has really put its cards on the table, given this coronavirus, and has indicated that it's going to pull out all stops. So it has done what other central banks have done. They've actually said it in a kind of coordinated way as well. So they are indicating that they are standing by and ready to take action.
Are they right to be doing that, Sarah, given the current nature of the threat to the economy and the markets?
Well, I'm not sure what they're going to do is actually going to have any long-term significance. Remember, they've got a pretty short runway to work with, so it's not as if it would be some kind of dramatic rate reduction, right? But they are indicating that they are standing by and ready to take action. And I think that that is an important symbolic statement. Markets clearly have reacted to that statement, have indicated that they are pleased that the Fed has engaged with that reassurance. But when it really comes down to it, the question is, does the coronavirus, particularly a potential pandemic, really care what the Fed is going to do? So we still have yet to see these cases coming in. The numbers are increasing. It doesn't appear as if it has bottomed out in any way. And so query as to what the Fed and monetary policy can ultimately do to deal with a potential pandemic.
But that doesn't mean that they weren't right in doing it, does it, Sarah? I mean, I get the argument that they can't obviously deal with the virus and the uncertainty that that'll cause and the economic damage. But if we really are talking about a behavioral shift hurting consumption in this country and services in this country, the demand kind of shock, I mean, then the Fed would be right to step in and get ahead of it, wouldn't they?
They would be. And you're right that in terms of a demand shock, that is something that a Fed funds rate cut would deal with. But there's also a potential supply shock as well. Right? So you've got this rare convergence of both a demand side shock and a supply side shock, which is not always the situation that a rate cut is going to do much to help with. So it's really a tricky situation. I'm not saying that it was inappropriate at all for the Fed to put out this reassurance. My point is only as to how effective it's actually going to be right now.
Do you think, Sarah, when we step back and we also factor in how the Fed decided to respond to the sell-off that we got when the trade war was being amped up, do you think they focus too much now on short-term equity market moves as opposed to long-term economic fundamentals?
Right. It's a great question because essentially what the Fed did during the trade war era was it indicated that it's willing to take preemptive steps, right? Just as you said, it's willing to say we're not going to wait till the actual full-blown harm occurs before we act. And that became kind of a precedent now that the Fed chair really might have to live with, which is that if he is, in fact, concerned about preempting possible economic harm that is coming, then clearly you take steps early, even before a full-fledged harm has manifested itself.
Isn't that what they try to do, though? Don't they try to get ahead of the curve?
They try to get ahead of the curve. They don't always succeed in getting ahead of a curve. And remember, it's very hard to project, in particular this shock, it's very hard to project what its effects are going to be and how effective a rate cut would be. And I think there's another component here, which is we've got to remember that we are already very close to the zero lower bound, right? So the runway is particularly short, and that has to come into the thinking of the Fed. In other words, how do we shepherd our tools so that we are saving some of our powder for a potential shock or downturn that comes later?
Sarah, thanks so much for joining us. Great to see you as always.
Great to see you.